Hey there, it's Bram Kanstein, and in this episode of Bitcoin for Millennials, I'm talking to James Lavish. He's the managing partner at the Bitcoin Opportunity Fund, a TradFi veteran, and a really great analyst on all things macro and Bitcoin. And in this episode, we talk about the evolving landscape and a comparison of Bitcoin to gold, how it is superior. We talk about liquidity cycles, corporate treasury adoption, nation state adoption, and James's outlook for 2025 and beyond. James has been instrumental in learning about Bitcoin and macro and finance in my personal Bitcoin journey. So I really enjoyed talking with him, and I hope that you do too, and that you find this episode insightful. Thanks for watching. Let's get into it. I think it's always interesting to talk to you, and I wanted to start with, people use digital gold as a term to illustrate, how to help people understand how to look at Bitcoin. But I think it has become like synonymous with Bitcoin. But I think we both agree that Bitcoin is better than gold, and you've described Bitcoin also as a better version of gold, especially in a modern era. Now that we've recently hit the 100K mark again, gold is also hitting new highs. Can you kind of like walk us through how Bitcoin's utility and value stack up against gold in today's environment?
I mean, look, gold is skyrocketing in price for good reason. It's been a store of value for centuries. If you look at gold and you look back in Roman times, I think the measure is it would buy you a certain number of loaves of bread, 1 ounce of gold. Well, flash forward to today, and it will buy you the same number of loaves of bread today, roughly, or a nice toga or a really nice suit in the early 1900s, and now it'll buy you a custom suit in today's day and age. So, gold has been a very good store of value, meaning if you work hard and you get money, you want to store it in something other than a good or service, and buying something, then gold has been a great asset to have to do that for good reason. And so what you're seeing today is a rise in the price of gold as investors are worried about the uncertainty in the market. They're worried about the uncertainty of the tariffs and the tariff war that Trump kind of started here, or he's pushing for some more fair treatment across border, and incentivizing companies to bring manufacturing home and all that. But just put that aside, there's a lot of uncertainty around it, even through this weekend and into this week, with Trump saying that they're coming to the table. They've struck a deal with China that's temporary. They're looking for ways to iron all these tariff questions out. So the question then for the market is, how impactful is it going to be on our economy? Is it going to be really inflationary? Is it going to cause problems with supply chains? Is it going to cause problems for companies that they're going to have layoffs because they can't pass through costs, the import costs and those tariffs onto their customers? And so those are the questions that people are asking and investors are concerned about. And so they have over the last month, the last 6 or 8 weeks, they were taking risk off the table. You saw the stock market draw down 20%. You saw Bitcoin draw down significantly, 30+%. And you also at the same time saw the yields of treasuries all over the map, and the US dollar falling sharply. So people were seeking a safe haven with gold, and it makes sense. Now you have this situation where you've got Bitcoin, which has also been rising rapidly. It started rising before the stock market started recovering. It started rising before you had these the latest round of headlines that are saying that the risk is coming off the table, meaning the uncertainty is coming off the table. There's a little bit more confidence in this process that Trump isn't going to just blow up the economy, that he'll be closer to reasonable about it. And so you've seen Bitcoin kind of decouple from the market a little bit. Why would that happen? Well, part of it has to do with just liquidity. It leads liquidity quite a bit. We can talk about that in a second. But one of the big things is that Bitcoin is being adopted rapidly, and it's being put into treasuries, corporate treasuries, likely sovereign treasuries. And if you look at the hash rate of Bitcoin, it's been rising exponentially, which would suggest that you have extraordinarily large players who are mining Bitcoin at close to the price, or maybe even at a loss for them, depending on what their mining equipment is and their cost of energy is. And they're doing that because they want to own Bitcoin without signaling to the market, walking into the open market and buying it. That would likely be large sovereigns. We don't have any data or confirmation of that. It's just speculation, but that's what it would look like to me. So you've had this a bit of Bitcoin decoupling. It hasn't been full. It still is, Bitcoin still has acted like a risk-on asset in periods here, and so I'm going to have to see that separation for a longer period of time to have confidence in that. But remember, Bitcoin is still a new asset that's being adopted, and it's widely becoming, slowly but more widely becoming, known as digital gold. But it's a better version of that, like you said, Bram. It's a much better version of gold for a number of reasons. Gold has its problems that it's not easily verifiable. You have to walk into vaults. You have to test the gold. Sometimes you have to melt it or cut it in half to make sure it's not just gold-plated nickel. You've seen headlines about major investment banks having fraudulent gold in their vaults. If you're an ETF, if you own a gold ETF, you don't know just how much gold is really attached to that underlying value of the ETF that you've bought into. It's not easy to audit. And it's also not very portable. It's not perfectly scarce. You see what happens when gold price ramps up, so does gold mining. The mining of gold ramps up, so that supply expands along with the rise in price. Not one for one, obviously, but it does. It's so if you look at Bitcoin against gold, why we love Bitcoin, why I've attached my career to it, and I started the Bitcoin Opportunity Fund around it, is that to me it's like it's as close to a perfect asset as you can get for storing value, and that's where the first adoption comes. It's perfectly decentralized, not perfectly, but it's extremely decentralized. Tens of thousands of nodes all over the world, miners, all. They would have to there's no central oversight party. There's no CEO. There's no chairman that's going to determine the trajectory of the protocol. The protocol is what it is. It's all run by code that are on these nodes, and it's decentralized. It's really important for your listeners to understand. It's also immutable because it's on the blockchain, and it's on a time chain where every single transaction every 10 minutes is recorded from the history from 2009 all the way to today. The only way that the next transaction is approved by all the other nodes is if it includes the exact same ledger that all the other nodes include. If it doesn't, then it's rejected, and that node's kicked off the network until it fixes its time chain. So it's immutable. You can't double spend. I can't give you Bitcoin or sell you Bitcoin and then sell somebody else the same Bitcoin. It's not possible. Not with the protocol. It's extraordinarily divisible, So what I mean by that is that there's 100 million Satoshis, and some of your listeners already know all this. But we're just going to talk about it really quickly. It's kind of that pizza analogy where you can cut it into 8 slices, you can cut it into 800 slices. Well, each Bitcoin can be cut into 100 million slices called Satoshis. And so it's almost infinite in supply, meaning that everybody could use it as money or as a store of value eventually. Also, it's portable. It can be taken anywhere. It's borderless. If you walk if you're trying to flee an oppressive state or someplace where you're having hyperinflation, for instance, and you want to take your assets and leave, you would likely want to turn them into currency that would be accepted elsewhere, anywhere, like the US dollar or gold. Well, as soon as you get to the border, that's likely to be confiscated or heavily taxed, depending on the regime. And so it's not easily transportable. But whereas with Bitcoin, if you know your 12 or 24 word phrase, you can walk across the border and it's waiting for you there. You're not even taking it. It's just all you have to do is connect to the internet, have your app, and you've got access to it. So these are ways that Bitcoin is far superior to gold as a store of value, as a future store of value. And I think that people are starting to realize that slowly. Institutional investors are still using it in a way that is more financialized, but as more and more institutional investors get to understand this, why Bitcoin is so different, that's where it starts to separate itself. And I'd like to see that kind of continue here over this next 3 to 5 years, and have Bitcoin truly decouple. And I think that there will be signs of that that we can talk about. So that was a long answer, but that's kind of how I see it.
Bitcoin custody is evolving, and OnRamp is leading this change with multi-institution custody, eliminating single points of failure. Instead of relying on one institution, OnRamp secures your Bitcoin in a cold storage multi-sig vault backed by 3 independent custodians, where no single party can move your funds alone, providing an unprecedented level of security. Your assets are protected by a 100 million Lloyd's of London insurance policy, with all transactions fully auditable on-chain and only executed at your direction. This means complete transparency and control over your assets at all time. Beyond custody, OnRamp provides comprehensive Bitcoin services that include trading, lending, inheritance planning, and IRAs. You can view them as your private Bitcoin banking partner tailored to your wealth preservation goals. Whether you're new to Bitcoin or an experienced holder, OnRamp's approach helps you secure your generational wealth with unmatched security and peace of mind. You can sign up at onrampbitcoin.com and use code BRAM, that's BRAM, to receive $150 in Bitcoin after your first deposit. If you first want to learn more, you can also book a free consultation via their website to speak with one of their Bitcoin custody experts. Tell them you came through me, and they'll take extra good care of you. Bitcoin is financial sovereignty, so why compromise when you need liquidity? Meet Debify, the Bitcoin-backed lending platform made by Bitcoiners for Bitcoiners. Debify connects you to institutional-grade liquidity and allows you to borrow fiat or stablecoins, all while keeping your Bitcoin 100% under your control with a non-custodial 3 out of 4 multi-sig escrow solution. Get competitive rates from a global marketplace of institutional-grade lenders, with loan terms that you choose, from 1 month up to a year. There are no hidden fees and there is no rehypothecation, just pure Bitcoin-aligned lending with the highest level of transparency and security. Are you ready to unlock liquidity without ever selling a single sat? Go to debify.com/Bram, that's BRAM, to check out their current lending offers. That's debify.com/Bram. Yeah, I think what I take from that is, and maybe that's nice to emphasize also for people listening, I think this is the opportunity, right? Like if you're looking into Bitcoin right now, if you're studying, if you're consuming content like this to understand like its place in the world, reason of existence, etc., then when you turn on the TV and look at finance people, they're talking about gold and digital gold and the decoupling, and yeah, gold is also rallying. But I think that what I take away from what you're saying is that this is a slow process, right? All the people that talk about gold have an incentive to talk about gold. They are educated in a certain way. They've operated in a certain way, like you have operated for decades in the financial world, right? Before you moved to Bitcoin, because you took the time to understand it and see, it's superior to any other asset that I can use to store value in. And also use as money, right? So it's like a 1-by-1 person conversion, from previous understanding to Bitcoin. And I think it's just interesting when people still talk about, why is gold more up than Bitcoin? My answer is just like, not enough people understand that Bitcoin is superior, and that is exactly your opportunity. I would
That's right. It's an arbitrage. That's right. It's an arbitrage of opportunity there, because Bitcoin will eventually reach the asset size of gold. Gold is $20 trillion. Bitcoin's only 2. just over 2. It still has, it's going to grow and catch up to gold. If you look at Jesse Myers, Croesus has this great chart that I can probably bring it up here.
Yeah. No, we've talked about it. It's the full potential valuation. Yeah, with the blocks image.
Exactly. And so you've seen that, and there's now $1 quadrillion US dollars worth of investable assets in the world. And, Bitcoin's just a tiny smidge of that, so it's got a long way to go to become that true store of value, right?
Yes. So we're still early. And I think this is also the continuous battle in a bit, right? Like when you're studying Bitcoin, when you're getting into this and you see these other people talk about it, like, it's nothing, it has no value, et cetera. My realization came, and I wonder what you think. For example, I talked to Richard Byworth, who said, like, most people in finance have no clue what finance is. So I wonder what you think.
It's fair.
People will figure out that Bitcoin is superior to gold very slowly. I usually just use the argument: if Bitcoin is gold with teleportation built in, if that is not enough for you, then I don't really know what to say.
If Bitcoin is what?
Gold with teleportation built in.
Yes.
If that is not enough, then okay. If that doesn't trigger you to think further, then it's fine. More opportunity for the people that are studying. You mentioned the liquidity cycles and central banks. You talked about how Bitcoin's price is tied to global liquidity cycles. I think there's an interesting discussion actually going on there. I think it's combined with what we just talked about, right? So yes, it is connected to liquidity cycles, but not everyone views Bitcoin as a risk-off asset, although I think BlackRock has defined it as such, right? So if liquidity rises and there's eventually more risk in the market, you want risk-off. Again, I think that's part of the opportunity. So with the Federal Reserve and the ECB both kind of signaling a pause on their rate cuts and liquidity tightening up again, how do you think their shifts will impact Bitcoin's path over the rest of the year? Or do you think we'll see any surprises? Yeah. What are your thoughts there?
Well, liquidity is so a lot of a lot of people who have been listening to me for a while know that I love this. Michael Howell from Cross Border Capital does a lot of work on liquidity, and I really like the way that he approaches it. And the reason I say that is because Michael uses more measures than just central bank liquidity. He adds in there some important features that have to do with collateral, and that has to do with the volatility of bonds and treasuries and all of debt, because that requires more collateral, which lowers liquidity if you have higher volatility. And then you've got the shadow, banking, which is like hedge funds and private funds that are creating liquidity through margin and that kind of thing. So there's and through lending and borrowing. So
is that a conversation you had recently? Because I'll link to it. That was fantastic.
I did have that conversation recently, and I really do respect Michael and his work. And so I can show you here this chart right here, and you can see that.
1 sec. Now it's up. Yeah,
you can see that this is what he shows as the global liquidity. And that's through beginning of 2025 here, and it's just now started to turn over a little bit. So what's important about this is that Michael talks about there being 5 to 6 year cycles of liquidity. So if I then pull out, like zoom out, and you can see what has been happening with Bitcoin and liquidity. Like we talk about liquidity driving risk assets in Bitcoin and gold. So this is really important. So let me share this screen, and you'll see that this is really one that I pay very close attention to over the long period of time. And this one shows, and this is basically what this is saying is that if you take Bitcoin and you push it back 3 months because it lags liquidity by 3 months, okay, then you'll see that it tracks it pretty closely, right? So this is Bitcoin a 3-month lag, and so what you're seeing here though is that the expansion of liquidity happened. And Bitcoin kind of it got ahead of itself before it happened. Now it's closed that gap, and it's gotten much more in line of where it was. So you can see it right here, and now it's right much more in line. So why is that important? Well, it's important because where we live today, Brahm, is we live in a financial world that is built on debt. It's built on borrowing. It's built on leverage. And you need additional leverage and borrowing to keep the whole thing going. There's no such thing anymore as real GDP. I mean, there is, but everything matters. Like what matters is the nominal.
Yes.
It's the inflation included number.
Yes.
So you need expansion of money supply, whether it's just printing currency and monetizing debt or monetizing securities in the market, or it's through lending and expansion of the money supply through lending, that kind of thing. So, but you need that in order to keep this whole thing going. And that's the reality. So when people start worrying about, well, is Bitcoin going to go down because of the 4-year cycle? Is it tied to the election? Is it, one of the questions you and I were talking about before the show is the cycles. And remember, Bitcoin's only had a few cycles. And it's in its adoption phase, so it's hard to say what is going to happen from cycle to cycle in when you have the halving, and then you also have all the uncertainty around which happens to perfectly coincide with the halving, almost perfectly, all the uncertainty around the election every 4 years, and what kind of policies are going to be in place. Well, now we're in a situation where you've got an administration that wants to cut taxes and cut spending. The problem is, Bram, we just got our numbers back for April and the fiscal spending, and the fiscal spending through April, read this, it's up 23%. 23% higher for the same period last year. Remember, we're on an October fiscal in the United States. So we've got October through April spent 1.05 trillion. Our deficit, was 1.05 trillion dollars. So we are on track, because the second half of the year is going to be a higher deficit here after you've gone through your April tax boon for the Treasury. Now you're going to have a higher deficit through the second half of the year, regardless of what Doge does. It doesn't appear that they're doing enough to pull down this deficit to get it anywhere near a balanced budget. So all of this feeds into we're still driven by fiscal dominance and deficit spending. So the question is, what is this administration doing anything that would upend the markets so severely that all assets correlate to one, including gold, including treasuries, everything, and we have a massive drawdown? That's the thing that worries me, is that we have some sort of cataclysmic credit event that would cause a meltdown in the treasury market, which would require the Fed to step in rapidly and shore it up, just like they did back in September of 2019 when we had the repo crisis. And that happened because there was a shortage of dollars. People, companies, countries needed US dollars. They couldn't get them. So to get them, they were lending treasuries and borrowing against them. And the rate at which they had to pay in order to get those dollars spiked up massively overnight, and it freaked out the Fed and the Treasury, and they swooped right in and started doing QE in the fall of 2019. This is well before the spring of 2020 and the pandemic lockdowns. So this is a concern. We have massive basis trades out there where hedge funds have $1 trillion worth of long short treasuries. If somebody blows up there, that could be extremely problematic. We've seen what is a trade that is likely trying to get ahead of a dumping of U.S. treasuries because of the possible trade war that we've waged into. So these are all question marks that people are trying to figure out. But really what it comes down to, when you just isolate it down to the first principles, is that the markets will generally follow the expansion of the money supply, and that is not going to stop anytime soon. It's just a question of when we have those lulls and we have the peaks and valleys. Going back to what I was saying at the very beginning of this question of cross-border capital and Michael Howell, he believes that we operate in 5 to 6 year cycles, and that this latest cycle that we're in an expansion of the money supply still, and he thinks that we're going to peak somewhere around the first quarter of 2026, which would mean that your risk asset prices would peak just about the summer of 2026, 1 year from, a little bit over a year from now. So, that's the question. Do we have some sort of event interim that causes a drawdown and spike? Do we have something that is, that is more of a grinding sideways for a while liquidity catches up and we get through this other mini cycle? So that's kind of my view on that.
And so with Bitcoin ETFs being live and ramping up again, actually this week, I think were record inflows. We saw SAB 121 revoked, which was a rule in the United States that prevented banks from holding Bitcoin and other digital assets. Now you see several banks saying like, hey, we're going to offer certain custodial services. A lot of asset managers are jumping into Bitcoin. How do you see this wave of institutional adoption shaping Bitcoin's future, perhaps? Are there any surprises that you've seen in how TradFi is approaching Bitcoin right now, or is it still, pretty much driven more by possible revenue, I'd say, rather than understanding the profoundness of how it's kind of flipping the script in the entire financial system and then making sure that they survive, actually?
Yeah, so that's a good question. First of all, the ETFs were a major, massive development for institutions, especially small institutions, to start wading into Bitcoin. Why is that? Because it's very difficult for an institution to actually hold Bitcoin, hold the keys. There's just too much personal risk. It's too much fiduciary risk to be buying Bitcoin on the exchange and either leaving it on the exchange or taking it off yourself and managing that your own custody. It's just too much personal and professional risk. So they just wouldn't do it by and large. Now you have the ETFs, and you're seeing smaller institutions like family offices or smaller pension funds, firefighter funds, and they're wading in and they're buying Bitcoin and they're buying the ETFs. Hedge funds are buying ETFs up and down the ladder. They're using them in different ways. They're buying the ETFs and they're shorting futures and they're doing all kinds of stuff around arbitrage with it. But now you're starting to see, you're starting to hear of larger institutions looking at this and larger companies, but we haven't had any verification, or we haven't had any really super encouraging news yet out of any of these large institutions. You're not seeing CalPERS, California Pension Fund, or Texas Teachers, or you're not seeing these massive endowments coming in and buying Bitcoin yet. So that's still on the horizon. They just don't understand it yet. They just do not understand how it's a separate asset.
If you want to self-custody your Bitcoin stack, I recommend the Blockstream Jade Plus. I've been using this premium Bitcoin-only hardware wallet for a few months now, and I love its design and ease of use. What makes it stand out is its open source hardware and software, and Blockstream's unique genuine check, which makes sure that your device is authentic. No backdoors or compromises. You can connect with the Jade Plus however you want: Bluetooth, USB-C, or you can go fully air-gapped with its built-in camera for cable-free QR transactions. The metal case feels solid and the color screen is easy to read, and it connects with your favorite Bitcoin apps like Blockstream Green, Sparrow, and Electrum. Get your Jade Plus today at store.blockstream.com and use code BRAM to get 10% of your entire order. Let's talk about something that not a lot of people think about before it's too late. Where are you storing your Bitcoin seed words? Are they truly secure? I found my solution with StampSeed. It's an elegant all-in-one titanium plate solution with no separate pieces to lose or manage. Your seed phrase gets permanently stamped into pure titanium that withstands fire, survives water, and lasts for generations. Unlike shallow etching methods, StampSeed's patented tools help you to deeply stamp every letter for permanent readability, protecting your financial legacy. When you order a titanium seed plate from StampSeed, you can also upload a custom design or your logo to customize the back of your plate to make it fully personalized. Paper seed phrases are a disaster waiting to happen. Secure your Bitcoin with StampSeed for decades to come. Visit stampseed.com and use code BRAM, that's BRAM, to get 15% off your order.
But as far as the SAB 121, well, for your listeners, the SAB 121 was kind of an end zone run that the SEC did around legislation, around Congress, by putting out this bulletin that basically said that if you have Bitcoin on your balance sheet, you have to list as a liability as well, even if you're just holding it as custody for a customer, it's not really your liability. You have to it's not a liability in your own balance sheet. You have to hold it like that. Well, that was kind of part of choke point 2.0 when Elizabeth Warren and her anti-crypto army were really threatening banks up and down, telling them not to do any business with any crypto or any Bitcoin companies. I felt it with the Bitcoin Opportunity Fund. We had massive delays in customers being able to subscribe, wire into my fund because banks just refused to send money to anything that had Bitcoin in the name. And so that was problematic. And we felt it was real. And so SAB 121 pretty much, it just blocked banks out from having any stomach to have any crypto business, any Bitcoin business. Flash forward to last spring, that legislation was that bulletin was it was basically it was nullified by Congress, and then it went to Biden's desk, and he vetoed that the shutdown of SAB 121, and it went back into full effect, basically. Well, now you have got Trump came into office, and quickly Gary Gensler's gone, and the SEC issued Bulletin 122, SAB 122, which basically got rid of 121, and then ended up saying that banks could deal with Bitcoin and Bitcoin related companies. So what's really important about that is it dissolved 121, and now it's given the green light to these big banks. So now you see like Schwab is wading in very, very quickly in a big way. And I expect that this is one of these developments, Bram, which is underappreciated, in my opinion, that this is going to be a really big deal where banks are going to wade in now, big banks, like JP Morgan Chase and Citigroup and Wells Fargo, eventually they're going to be wading in, hopefully later this year, into next year, and offering products and services around particularly Bitcoin and likely some others like Ethereum or Solana or whatever. But what's really important about this is you're going to be able to buy and sell Bitcoin right there through your bank account or hold it there with them. And here's the really important part. You'll be able to, the companies that create these products, you'll be able to borrow against your Bitcoin without having to sell it. And they'll have collateralized products, collateralized loans and lending and other things that they'll be able to do that they can't have those products and services, or they couldn't up until now. I think it's a really big development, and it's going to open people's eyes and make it that much more mainstream for everybody. And that just continues to push this adoption phase forward. And it's an exciting development, in my opinion.
Yeah, I think it's interesting that they are moving that way. What I just said when I asked the question, I do think it's like revenue driven. Right. I don't think they understand.
No question. Yeah. No question. It's primarily revenue driven, but there are analysts and officers who do understand Bitcoin well. They've just been reluctant to deal with it because of these things.
Do you think there will be a tipping point where banks realize that, the system that they're participating in is just, on its way to its end, like you and Lynn Alden say, that this train ain't stopping. Because for me, for example, it feels like when I hear Larry Fink talk about Bitcoin and see his progression in how he talks about it, and just thinking about, and maybe you can elaborate, right? But someone like that doesn't talk randomly. It's not like Larry says what he wants and then, the legal people figure it out. I think it's signed off to a degree, like this is our line of communication, right? Like this is how we talk about it. And so when I hear him talk, although I'm not really a fan of BlackRock, like he understands what this is 100%, right? Like how he 100%. Talks about it. And so I find it very interesting that if you think about someone with his firm who's probably the biggest winner of the fiat money game in the entire world is putting one leg in the Bitcoin boat, and really advocating, eventually ETFs. And, I think if they do in-kind, by the way, redemptions, then it's going to be even more clear that they understand, what this is. So what I find interesting is that someone like that, with a firm like that, is putting one leg in the Bitcoin boat.
Yeah, I mean, look, there are a few executives like Larry Fink who do understand it implicitly. Larry wants to make money. He's the head of BlackRock and the largest asset manager in the world, and he wants to maximize that ability to generate revenue, and Bitcoin's a great way to do that. So it's part of he's talking his book, of course, but I do think he explicitly understands it. When do institutions when do they really grasp that Bitcoin is not going away? It's not just a risk asset, that it is different. Now, it takes time. It's going to take continuous education. And, we saw this once before, Bram, in a different way. Back in the 90s, we had a CIO at Yale University. His name was David Swenson. The endowments were struggling to find ways to maximize returns. David started wading into the alternative investment space. He started buying, in the endowment, he started investing in hedge funds, private equity, venture capital. And everybody around him thought he was just crazy because this stuff was risky. It wasn't overseen by the SEC like other, traditional products were, traditional securities were. So they thought he was kind of crazy. But then they saw his returns. And next thing you know, you had Harvard and Texas and Brown and all the big endowments start wading in. Brown's not one of the biggest ones, but you know what I mean. Stanford. So you had all these massive endowments start wading into these alternative investments because they saw that returns were there, and in order to compete they had to have similar returns. And so Wall Street's not a perfect meritocracy, but there is an element of it where you eat what you kill. So if you do well, you're going to get paid well. Well, they want to get paid well. And if they're underperforming Yale by multiple percentage points, then that's not going to bode well for their performance review and their pay. And so I think we're going to see a similar thing play out here. I think we're going to see something similar play out here with Bitcoin, in that you're going to have endowments, institutions, family offices who own Bitcoin are going to do very well. And then others who don't own any of it, have no exposure to it, and are going to lag behind.
Yeah.
And I think that's going to be, and that goes to your 60-40 portfolio, where Bitcoin enhances every portfolio that it's been in, because it actually raises the Sharpe ratio. And what do I mean by that? The Sharpe ratio is the risk-adjusted return. So it includes a measure of volatility in the return. So if it's very volatile, that's not very good for your returns. But if it's also rising at a very quick pace with that volatility, then it can actually be a good thing. And so what we've seen in Bitcoin over the last 15 years, especially the last 10, is that, if you just isolate the last 10, is that you put it in any of these portfolios and it enhances your returns. It raises your Sharpe ratio, or your risk-adjusted return, because the returns are so great that even with the volatility, it still is great for your portfolio. Even if you add 1%, 3%, 5%, 10%, it just is better and better and better on your, for your overall returns and for your risk-adjusted returns, which is just mind-blowing to investors. And they're starting to catch on to this. Some of the savvy investors are starting to catch on to this. So those, I would say pension funds, those institutions and family offices that are doing this now, and they're including Bitcoin in their portfolios now, I expect to outperform the institutions that are not. And that's going to start waking people up. And it becomes something that over the last, 5 to 10 years, Bitcoin was a risk to have in your portfolio. It was a risk to own it, but it's slowly changing into a risk to not own it. And that kind of wakes people up. And that's kind of the first big step, is just including it in your portfolios. But what are they going to allocate away from and into that? Likely risk assets. They're going to likely allocate away from either some sort of alternative technology fund, or something like technology-related investment, or stocks, pure risk assets. They're going to reallocate into Bitcoin. Once they start realizing that they cannot get, when institutions, once they realize that there's just no way to really get a real return on bonds long term, especially 10-year, 20-year, 30-year treasuries. And once they start to understand that what you're getting is a negative real yield, meaning that real inflation is going up faster than the yield of your bond, then they're going to start to realize that they need to have something that is like gold, but better. And then that's when they start reallocating from bond portfolios into Bitcoin, in order to have something that is a better store of value that will keep up with the expansion of the money supply. You just saw what it does with when you have the liquidity measure, and you watch liquidity, which is much more closely related to inflation, like expansion of the money supply. Well, then they start reallocating from bond portfolios, and at that point, Bram, it just completely explodes, and then it becomes it becomes a different, separate asset class like gold.
What I love, and that's a little pat on the back to myself maybe, but you were a big part of that. Like, I think it's so fascinating that we figured this out and they didn't. You know what I mean?
Right.
Like it feels like the fiat money system is very narrative driven. Bonds are the risk-free rate and all these things. Well, yes, nominally, again, perhaps, right?
Perhaps.
So nominally you're in the green or even, but in real terms you're not.
Yeah.
And over time you're even worse, right?
And over
If you
time
have
you're even
a
worse.
long duration. Yeah.
But one of the things you said though is that it's funny how we figured out, yet these institutions haven't. But there's a reason for that. There's no they're not incentivized to figure out something that breaks up their system. They're incentivized to ignore it. You know.
Well, to a degree. I mean, what is also funny is that just general plebs have outperformed full-on professional hedge fund managers, right? By just buying Bitcoin and doing nothing, which is amazing. I would say I disagree with you because I'm thinking about the picture, and I've referenced that a lot. I don't know if you know it, but there's like a picture with like a little orange pyramid, which is like Bitcoin, and then you have like a big inverted triangle with like all the capital in the world, and if people do the mental exercise that you just did, right? Okay, there's $1 quadrillion in assets. They're allocated in a certain way. These are the performances of these assets. They go up because money supply goes up. So not even in real terms, in value, right? They go up in price, not in value. I think is a great distinction. So
more dollars chasing or more capital chasing the same numbers of
amount
assets.
Of things.
Right.
Yes, exactly. Right. So all the dollars just go into these assets. So the numbers go up basically, and people are incentivized to make more of these assets, right? Whether that's homes or dig for gold or more whiskey bottles or whatever,
right.
more art and stuff like that. There's one thing that doesn't go up when the demand goes up because the supply is fixed, and that's Bitcoin, right? And so if you do that mental exercise and then realize, hey, what are actually the properties of all these things that I'm invested in? And what are the properties of Bitcoin? When you really study and you figure out that those are superior, then that image comes into play where you have like this orange pyramid that doesn't grow bigger. There's a set amount of units, and there's basically 1 quadrillion. You could say infinite. There's an infinite amount of money that could and the economic energy that represents could be stored in that little. A pyramid that doesn't grow bigger. Yeah, once you understand that, then you also know why the price of Bitcoin is going up. And eventually, I would add also the real world value, like the things that you could buy with that Bitcoin, right? But that is in a stage after. And so, I don't know. That was kind of a summary, I think, of what you taught me along the way.
Yeah, it's exactly right. And and that's the right way to think about it. But institutions think about traditional metrics, traditional investment vehicles, traditional securities. They can't get their head around this new technology that seems like a fly by night, thing. And they're not willing to do the work to do it, most of them, because they just read what's in mainstream media and hear that it's boiling oceans and that,
although it's their job, right? That is so fascinating.
Correct. But what did you say at the beginning? Like
the most people in finance don't know about finance.
Don't know about finance, right? So So it's just a reality.
Yeah, interesting. So we are seeing, I'd say, the Bitcoin Treasury corporate adoption also accelerate. I think in that, I don't know, call it industry or just corporations are figuring out, well, if I have a bunch of cash, or investors are figuring out if there's a company with a bunch of cash, holding it is dumb, putting it in bonds is dumb, giving it back to investors as a dividend is dumb, because you basically are showing, I don't know where to put this money to grow my company, doing so you could put it in R&D or whatever, right? Doing acquisitions is usually failure, etc. Right? So these companies have a very prevalent problem, I'd say, and they're slowly figuring out. There's this guy, Michael Saylor, with MicroStrategy, with basically a deadbeat company that had some cash, and he figured out how to survive and is on his way to becoming the most valuable company in the world. So we see, I don't know, insane. Today I've seen 5-6 tweets, I think, of new corporate treasury. So I think that that's a side note, but like altcoins and all that stuff is dead. And I think like Bitcoin Treasury companies are like the altcoins of this cycle, even if the cycle still persists. But we'll talk about that in a bit. Yeah, what are your views on this? Like, could this be this cycle's bubble? How does it play out as it concentrates wealth to these companies? Like, yeah, what are your thoughts? Kind of similar to ICOs, where they sucked up all the Ethereum basically. Yeah, so many people. This was a question from X. They are like, yeah, what are your thoughts on this? And also, is this something that could be the danger of this cycle?
Well, MicroStrategy, you're right. He went from just a few $billion market cap to over $115 billion market cap now, and he did that just by borrowing money and buying Bitcoin with it. And so his playbook has been astounding. What Michael did is a little bit different. He's able to do this in a way that other companies have not been able to do yet. Maybe they will be able to do it in the future, but they've not been able to do it yet. And what he's done is he's monetized the volatility of the underlying asset that he's put on his balance sheet. What do I mean by that? I mean that he's figured out a way to buy Bitcoin, put it on the balance sheet, which creates volatility in his stock that's tied to the underlying Bitcoin, which creates this ability to issue debt and take that debt and buy more Bitcoin with it, which allows the traders who like that debt, this convertible bonds, they like them because they have a conversion price in them, that if the stock goes over a certain price, then they get to convert that debt into that common equity and make more money on the upside. So it's kind of like it's an option for them. So because of the underlying volatility of Bitcoin, he's able to borrow money basically free. He doesn't have to have a coupon on that debt. And risk or convertible bond traders and arbitrage traders love it because as it's going up and down in value, the stock, they have what's called the delta hedge, which is the optimal amount of stock to short against the bond that they bought. And then they can trade around that. If the stock goes up, they can short more. If it comes in, they cover that and they make money along the way as the stock is going up. And then eventually they'll be in the money, many of them are, and have this upside optionality on that stock. So on the convertible bond that they bought. So Michael has figured out that he can just keep borrowing money and buying Bitcoin and growing this balance sheet, and the convertible bond market will eat it all up. And he did that all the way through into the fourth quarter of last year. He hasn't done convert debt recently, but he's done other things. He's done perpetual, he's done perpetual preferreds, and he's done some other stuff. But he's basically found a way to create volatility in his underlying stock and then monetize that. And it's been brilliant. Now he's got over 550,000 Bitcoin on his balance sheet now. So he kind of stands alone in that category. So when you have other companies who are doing the same thing, whether it's Semler Scientific or we just heard about, Cantor Equity Partners teaming up with Jack Mallers and doing 21, they're going to do something similar. You've got Kindly is going to do something similar. We just had come out. There's a bunch of companies doing this. MetaPlanet is doing it in Japan. There are different ways that we think companies put Bitcoin on a balance sheet. It's important, and it can be additive. It can be an accretive acquisition for them. It's accretive for Michael because the more volatility, the more he can borrow, the more the stock goes up, and so it's accretive for him. He borrows money, and he buys Bitcoin with it. The stock price goes up at a 2-to-1 ratio, basically right now. Other companies that are doing that need to get their balance sheet a lot bigger in order to be able to tap into the convertible bond market. So they're behind on that, but eventually they could get there. if they're going to use the same playbook. I think 21 is interesting because they came out and explicitly said, Jack Mallers came out, the CEO of Strike, who's going to be the CEO of 21 as well. What's interesting about what they're doing is that they've explicitly said they want to be a Bitcoin finance company. So they're going to be creating products, collateralized products, lending products through this new company, 21. And that's going to be important. So that's a little bit different than other companies. It would be obvious for MicroStrategy to do that in the future. They have not laid out a roadmap for that yet, but it would be obvious for them to do that, being the largest holder of Bitcoin
become
in the world.
A bank, right? Functionally.
Become the JP Morgan of Bitcoin.
Yeah.
You know?
Well, or I'm saying bank as an illustrative.
Well, that's what it would be, right? The financial company. So
yeah.
And then the other category is these Bitcoin, the companies who are adding Bitcoin to their balance sheet in order to solve a geographical issue. And what I mean by that is that you can't there's no Bitcoin ETFs in Japan. So MetaPlanet is solving that for them. It's a Bitcoin proxy for the Japanese investors, where they can buy it for their personal or retirement accounts. And we're seeing the same thing. We've got a deal that's happening in Brazil. We've got a deal that's likely happening in India, and the same sort of issues where you have geographical barriers to owning Bitcoin as in your investment account or in your retirement account that you just don't have the capability to do. So you do have Bitcoin proxies for that, and those are the ones that we're talking about there. So there's a purpose for these, and there's a need for them in a number of different ways. How many? I don't know. Is it a bubble? No, not yet. If we see every single company just adding Bitcoin to their balance sheet and suddenly having, a 3, 4, 5, 6x ratio to the Bitcoin underlying on their balance sheet without any underlying business to attach that multiple to, then yes, then it's a bubble. But we're not seeing that yet. And I'm not quite worried about it yet. Do you get frothy right out of the gates? Some of these get pretty frothy right out of the gates, and that's excitement around it and possibly some short covering. But by and large, we like a lot of what we see.
Yeah. And so you've mentioned a price target of around 180K for Bitcoin by next fall. Yeah, we've had the halving behind us, so that's kind of like the start of this cycle, right? With supply shock, we have this institutional demand. We see the hodl rate numbers go up, right? So the Bitcoin that hasn't been moved in a year, 2 year, 3 years, I think 2 year is also above 50%. And my idea of that is like, yeah, these people know what they have, right? And they went through the whole run up and drawdown and now back up. So I think that is a signal. What do you see as the biggest drivers for Bitcoin price from here? And are there any risks you are seeing or thinking about?
Well, it's kind of two things here, right, Bram? That you do have risks to the economy and the market. We've talked about, with the tariffs and possible grinding lower into an economic downturn. It's all possible. But we also have, on the flip side of that, we've got the likely expansion of the money supply and liquidity through the end of this year and into next year. And that's a driver to risk assets and gold and Bitcoin. And so I do see that, barring any credit event, I do see that being the main driver for price here. But also, on top of that, you've got all of these positive tailwinds that are driving the adoption of Bitcoin. And those tailwinds are the ETFs we talked about, the options on the ETFs, which enable institutions to hold more underlying and use options to manage risk around it. Important, especially for hedge funds. And then you've got the FASB rule, the accounting change that we didn't talk about yet, which is, for your listeners very quickly, FASB changed a rule where they used to be that if you own Bitcoin as a company on your balance sheet, you had to mark it at the lower of the cost or the lowest it's ever been and hold it as an impaired asset on your balance sheet. But that was changed this last year. And so now it's mark to market. So wherever you buy it, you can market to market that day, and wherever it's trading in the market. So that's a really big, that's a big deal too. The SAB 121 we talked about is a big deal. And of course, you've got the Bitcoin strategic reserve that was signed in as an executive order by Trump. And so, but President Trump signed that into he signed into legislation through executive order. However, it was disappointing to many of the investors who were expecting that executive order to come with a plan to buy more Bitcoin. Well, there's no plan to buy anymore because it has to be budget neutral. So basically that executive order said, yeah, we're going to start the strategic reserve. Number one, that means that we're not going to sell any more Bitcoin than we already have. And so we think about 200,000 Bitcoin on the U.S. government balance sheet somewhere, and they sold about half of that. There was 400, and over the last 10 years, they've sold about 200,000 Bitcoin that they had seized through illicit or illegal activities, and so, but we still have 200. And we're supposed to hold that through this executive order. But we could add to it. We could add to that Bitcoin reserve as long as it's budget neutral, meaning it does not require us to borrow any more money or take away from, it doesn't increase the budget. So how could we do that? Well, one of the obvious things would be to sell the other cryptocurrencies that have been seized through illicit or illegal activities, which would be now included in that in the cryptocurrency account, which is it's called the
stockpile. Is that the stockpile?
The stockpile, strategic stockpile.
Yeah.
So that would be obvious to sell those because there's no function to add to those except through seizure, and even budget neutral, they can't add to those. So that would be obvious. The other thing would be maybe to sell some gold to buy Bitcoin. But now you flash forward to the Bitcoin Act, which is the act that Senator Lummis had brought to had written. She authored this, and it's the idea that the U.S. government would buy 200,000 Bitcoin a year for 5 years to buy a total of 1 million Bitcoin. And how they do that, well, that would be determined through legislation. This has to go to the floor. It has to go through policy, but what's important about this is that you have the strategic reserve, and now you have this bill. Prior to 8 weeks ago, Senator Lummis had no co-signers. Now she's got a number of co-signers, and the bill is going to find its way to the floor eventually. It's got to go through committees, periods. It's got to be revised. It's going to be changed, and they're going to have to come up with ways that and rules around how they can acquire this Bitcoin or whatever. But that is another tailwind that's coming down the pipe. So all of these things, including likely some large companies throughout this year adding Bitcoin to their balance sheet, S&P 500 type companies that will add Bitcoin to their balance sheet in their treasury. And so when you see that all these things happen, this drives adoption on top of everything we're talking about. So that's why I'm extraordinarily bullish long term. Short term, it's super volatile. It could go down 20% in the next few weeks. We don't know. It could go up 20%. We don't know. But over the long period of time, I'm extremely confident that it's going to be higher over the course of the next 5 to 10 years. And so that's why we remain invested in the Bitcoin Opportunity Fund, and we remain exposed. We manage volatility around it. We manage volatility around the general market exposure, and we use systemic risk measures. But by and large, we're really, really excited about the future with Bitcoin. As far as my price prediction, I said $180,000 last year. I think I made that prediction. So I hate price predictions, but it's still, in my mind, it's still in play, and that would be somewhere around October, November in my mind. Whether that happens this year or not, I don't know. We'll see what happens with the general market, whether we have a steep drawdown and a quick recovery, or if we have a grind sideways because of the economy. It all depends on where this liquidity goes and how the Fed acts, and the kind of impacts that tariffs or possible economic downturn could have on the overall markets.
Yeah. So to wrap up, I'd love to ask you some short questions.
Yeah.
Yeah, I'm interested to hear what makes you most bullish about Bitcoin's role in the financial system over, let's say, the next decade. And what keeps you up at night? What is the big picture for you?
So, well, nothing's keeping me up at night with Bitcoin right now.
Well, we are sleeping very well, yeah, probably.
Yeah, but the one thing that I would be concerned of slightly would be quantum computing and what that means, because I just don't understand it well enough, I don't think. But we're working on that and trying to understand that better. But it doesn't keep me up at night yet. Why am I so bullish? Well, because of all of those tailwinds that I just explained to you. Because this is an asset that's being adopted, and what I'm super bullish about in the future, Bram, is not just it becoming an allocation to regular risk portfolios, but for it to then start eating into bond portfolios and real estate portfolios. That's what I'm super bullish for. And that's when you go from $1 million per coin to $10 million per coin. And that's over the long period of time. But it's not going to happen overnight. It's going to take time. But as this network continues to strengthen, I've said it before, that Bitcoin it's a fortress of digital power. It's nation state resistant, and that's because it is operating on a network that consumes 180 terawatt hours of energy a year. 180,000, terawatt hours a year. And that is the equivalent of over 20 full-scale nuclear reactors running 24/7. And so that is nation state level resistant, and it makes me sleep well at night. Let's put it that way.
Nice. To wrap up, I wanted to ask you, what is a spicy or unpopular opinion you have on Bitcoin that you think not many people would agree with you?
A spicy or unpopular opinion that I have on Bitcoin that not many people. I think that the opinion I have that many Bitcoiners would not agree with is, I think that institutional adoption is important, and it's necessary for Bitcoin to get taken to the next level. It was bound to happen, and I think it's starting to happen. It'll happen in a big way, and I think it's an important and a positive development in Bitcoin.
Awesome, man. Well, thanks for sharing. Thanks so much for your time, and great update. And let's do it again in the future. Thanks, man.
Absolutely. It's great to be here, and I look forward to the next time, bro.
I hope you enjoyed this episode. If you did, you can click here to find more just like it, and click here to find all Bitcoin for Millennials podcast episodes. Also, please like this video if you want to help shine a light on the message of Bitcoin, and subscribe to my channel to stay connected. I hope to see you for a next episode. Bye.